Last week, more than 200 billion US dollars was raised in the entire crypto market within 24 hours following a very intense sell-off. And that whilst the world has observed that digital assets have launched a real revolution and are bringing important changes to the current payments and banking industry. So, how come, you may wonder? Volatility, reliability, and regulatory developments remain a top priority to de-risk crypto and further grow global adoption rates. In today's video, we will break down how the entire Terra Luna ecosystem came down, what the future regulated cryptos may hold, and the insane momentum of CBDCs. Good morning everyone, this is Marek from Payment Genes, and today it's all about payments. So the thing about Luna and Terra that's really interesting is that Luna is a cryptocurrency, whilst Terra, or USD, is considered a stablecoin. However, rather than using a dollar to back their stablecoin, they actually have been backing their stablecoin with Luna algorithmically. As per the algorithmic part, you basically set computer programs on both sides that buy and sell Luna and USD. That's currency arbitrage. And you maintain that $1 now with an algorithmic stablecoin. This is supposed to be done automatically by using the underlying currency that is pegged to essentially print more of that currency or to sell that currency as and when needed. In short, this is how Terra should work until it all went down south last week. The algorithm does that market stabilization automatically. So Luna creates Luna. You create more? What is the consequence of that? You lower the price of Luna, but you use this created Luna to go and buy more USD to try to drive it back up to $1. But the more you end up doing so, the more you end up devaluing Luna to try to level up to that peg. And here's where the real problem comes in. It's when people lose faith and are going to sell their USD as they don't believe it's worth $1 anymore. In the end, the Terra money machine, including a supposed stablecoin, collapsed entirely. For a top 5 project, this was not only disastrous for itself, but it massively affected the entire cryptocurrency market last week as well. The high volatility also means that households cannot yet fully rely on crypto assets as a store of value to smooth their consumption over time. And this is just as true for stablecoins, given the poor consumer protection and the vulnerability to panic selling that characterize them in the absence of an appropriate regulation and supervision. When adequately regulated and supervised, stablecoins are nothing more than e-money arrangements. In the absence of adequate controls, crypto assets run the risk of driving speculation by promising fast and high returns and exploiting regulatory loopholes that leave investors without much protection. Some countries have banned crypto assets outright, while others have restricted their use. This situation is clearly unsatisfactory, as crypto assets are a global phenomenon and their underlying technologies could play a very important role in the future of finance. We expect there to be 4 key regulatory developments in the near future. Rules to prevent the use of crypto assets for AML and terrorist financing, taxation of crypto assets, public disclosure and regulatory reporting to be strengthened, standardization of code of conduct and transparency requirements. These regulatory developments could grow the overall trust in crypto. Although we do have to say that institutional and retail trust is significant in many countries already. A layer of regulatory actions could be the final step for mass adoption. The USD Luna craze has spread across the crypto community, across non-crypto holders worldwide, as well as policymakers like a wildfire. The latter especially have utilized this opportunity to push for more regulation and a centrally controlled central bank digital currency. The crypto community is divided as such that some defy regulatory measurements and restrictions and CBDCs as they enter the crypto space due to its decentralized nature in the first place. Others speculate that CBDCs and regulation will only help with mainstream crypto and blockchain adoption. Almost half of the central banks in the world have started CBDC projects already. In its 2021 survey of the world's central banks, the BIS found that 9 out of 10 are actively exploring CBDCs and more than half are already actively developing them or have been running concrete experiments. Let us know your thoughts in the comments below, where you believe the future of cryptocurrencies is heading towards. For now, I'd like to thank you again for watching. I'm looking forward to see you again next time. Cheers, bye-bye!